Welcome to episode 2, Mr. Flynn.
Great to be here. Very excited to see some trades that you've been making over the past few weeks.
Yes, good to see you still standing, still alive, not yet on the street.
Not yet on the street. Haven't gone completely broke yet.
So we had our first week of trading, and on my half of things, more studying than trading, but a couple of trades to try and keep up with you, who've seemed to, from what I hear, have been going quickly. We'll update some totals. Shall we do that out of the gate, get some totals out of the way, and then break into how we get them?
Yeah, I reckon let's kick off with some totals. Let's see who's got their nose in front at the moment. And then let's have a little look at what we've been learning and why we made those trades. I'm interested to see, having looked at what you've done so far sneakily on the back end, I want to know why you did what you did.
Great. I'll start. I'll reveal where my snout is, and then we will have a look at yours. So actually, I'm going to share screen because I've prepared something earlier this week. So for example, for everybody following along at home, and mainly for us, I've created this sheet here that is going to be tracking our progress. So we start at $30,000. I've left these random hypothetical, my snout always ahead figures in here, just so you can see we're going to be plotting this to the side. And this is basically going to be the easy overview and comparison on how we're both doing. Of course, we're both into week 1. It could be in week 2 now. It depends on how we classify the weeks. But this will be basically the home dashboard where we keep everything up to date. And we can go back and take a look at who was where at what point. Now down the bottom, I got 2 more tabs. I've got my personal investments, which I'll jump into in just a second. You can see my total is now above $30,000 after the week, and it's $30,334.57. You can see how I got there, but I'll tell you why I made those specific moves in just a second. The last one I put over here is just opportunity. So based on what we were talking about last week, these are basically e-commerce, cryptocurrency / DeFi is sort of an area I want to focus on, and social arb trading, which I edited our podcast, so I did watch it back. I don't think I actually went into enough detail with what that is, so I'd like to talk about that today as well, because I also read Chris's book, which was, like 100 out of 10. I learned so much in there, and I feel like I'm different already in terms of thinking about investments. Obviously, I want to get better and better every week, but I feel much more confident in what I'm looking at when I'm looking at just random news articles or like just day-to-day things, which we'll get into because I don't think I mentioned enough about that last week. So what I have done, though, is my first trade was placed 28th of June, and I bought basically $1,340 worth of Cardano, which is a cryptocurrency. That did pop up to $1.38. I'll explain some of my psychology here as well. Cryptocurrency at the moment, I believe, and I have no proof of this, is on a downward trend. If you zoom out, even like we can go to CoinMarketCap, and if we zoom out, it looks pretty terrible in terms of how it's going. Of course, it could just turn around and go up, but it very much, I feel like, looks like we're at this point right here where it's going to go up a little bit and down. And it's sort of been, you can see, stagnant for a while, and it was stagnant up here after this drop. So I'm not like buying and holding at the moment. So actually what I did is I sold it as soon as I was up 3%. I'm like, sell it and at least be in the positive for week 1. There's no real tricks to this. I made $40 US. I earn US dollars, by the way, everyone watching along. So I just convert my money at the end. But I'm investing 30,000 Australian to keep it even, which I believe is about 25%, 75 cents at the moment. So I get about 25% less money, which I believe would be what, 7,500 less. So I'm investing 22.5 US. And that was, I got my nose, I got my snout moving from the starting line. Now, the next one was very fascinating because you can see I actually got a 77% return. And I update. So obviously these figures don't update by themselves. I literally just, this is the price of the actual stock at the moment. Manually update this before the episode starts. It's on a Sunday, so the stock market's closed. So nothing's moving at the moment. This number was actually up 150%. And it was phenomenal because I literally went into this IPO. When was it? On the 29th of June. I woke up the next morning and I was up 150%. And I went to Webull, which is the app that I use to manage my US stocks. And literally, it's the biggest mover on the day by far. The second biggest mover was like a 40%. And this was 150% growth that day. And it was an IPO, which for those of you who don't know is an initial public offering where a private company offers shares publicly. So now the public can invest in it. You don't have to be a private investor with a lot of money to get in. And I got in just before it went public because Webull, I don't know if it's a new feature, but they show you the list of things that are about to IPO and let you buy into them. So my thoughts around this one was not, oh, this is Glimpse. They are actually a VR company. And I'm a big believer in VR, especially education through VR, which is what Glimpse do. But I had no look at their technical or fundamental analysis on their company. But I was like, if this is a new feature on Webull and they're on the Webull homepage, I'm sure a lot of people are just going to be doing what I'm doing. Like, I'll join an IPO. I've never joined an IPO before. And that's what, that's why I appreciate you, Pete, and this podcast, because it gives me the opportunity to try this stuff, which I never would have tried. Just because I want to test everything and become more knowledgeable. So I was up 150% on that first day. Then the stock halved, of course, because I don't know. I'm not looking at the fundamentals. I don't know what's going on, but a lot of people just cashed out. I did only put $100 or $98 in there. I do regret not putting my full $30,000 in there and coming back today with a $70,000 total, which would have been unreal. But I was very excited to do more of those IPOs because what I actually did, and we can talk more about this episode or the next one, I went back and looked at all the IPOs recently that have been done through Webull, and all of them out of the last 20 are in the green, as in positive beyond what you could get in them at. And at least about 5 out of those 20 had doubled since they IPO'd. So I'm not sure because we're also just in a massive bull run the last couple of weeks in the market. So I don't know if everything's just popping, but I'd like to keep an eye on all these IPOs because it doesn't seem to be an IPO that's like halved in value, but there's a lot that double. So if you can just join every IPO, there might just be, for a very short term while it's a bull market, a good opportunity to double money in there. The third one. Now, this one I won't talk too much about because I'll get into it when I talk about the Chris Camillo's book, which is fantastic once again. But Discovery, they're a US stock, and it's basically like, I don't know exactly what they're a production company. So they own a lot of TV shows and a lot of media that they put on like Foxtel or whatever the US version of Foxtel, which is like pay TV, direct TV, I think it's called, or something like that. They own like 50,000 hours of content on that, but they just launched, just like Disney Plus, their own platform. Their stock doubled and then it halved, and now I'm back in after it halved. I'll talk more details about this trade because it does really reflect that DumbMoney book. I put in $3,700 US, and it's up 1.37%, which gives me $50 US, $67 Australian up. And the last one, this is actually an interesting one because this is almost a last minute trade. It was 2nd of July on a Friday. And what I've been chatting to you, Pete, a little bit throughout the week, and we've been going back and forward, and everything's in such a bull market that like things are riding high, and that not one thing we did lost money. And I'm like, oh, it's so fascinating because I did 3 trades, relatively uneducated, apart from the Discovery one here. And they were all making money, but I didn't put very much of my portfolio into anything. So I had like $5,000 total in when I had 30,000 or 22,500 US. And I'm like, well, I read Chris's book, and one of his big lessons of the book is obviously more risk equals more reward. And at the moment, I've got $15,000 or $17,000 sitting in cash, which is just depreciating, instead of sitting in like an Apple stock. Or an index fund, which obviously averages between 10 and 17, or between 7 and 17% year on year, where your cash literally depreciates at 2% a year on average. So I'm like, I shouldn't be holding any cash. So I actually got into Apple stock, which was on quite a bull run, and I hold a lot of that outside this challenge, almost as a stability thing to ride the bull run and have more risk in my actual account. instead of holding cash, because I don't know why I would be holding cash at any time unless I'm obviously scared of losing a lot of money, which I don't think you can be scared. At least is my view now. I can't be scared of losing money in this challenge, because if we're trying to get from 30 G's to $1 million, I shouldn't be trying to limit downside. I should be looking at limiting, at maximizing upside as much as possible. That's my current viewpoint on it. So far, I'm up 111 Australian dollars on that. So I'm not complaining. We'll see how next week goes for us. But that's my portfolio from week one. Big takeaways is it is a massive bull week, and almost anything that I look at is up. There's not much that is actually down. I'm not complaining about that, but I haven't made any big moves. I want to talk to you about options trading this episode as well, which is how I can leverage more of my money, like I was talking about, take a little bit more risk from our $30,000. But I'll throw the mic over to you, because I'd love to see just exactly where your snout is in this race. Good sir.
I am very, very interested in a few of the things that you invested in, and we'll touch more on the IPO later, because I was looking at that going, damn, like that's an interesting idea. And I like how you sort of looked at it from the angel investing point of view, where you're like, angel investors invest in lots of those smaller companies. And this is kind of a faster way to do it. So you're not investing for 7 years and then getting a large return through private equity at the end of it. And I mean, angel investing, like you'd put money into private equity, they'd put money behind businesses, take them public, and then you take your return after that. The opportunity here, is it Webull?
Webull is the app, yeah.
Webull, yeah. The opportunity with Webull seems like you can jump on all these IPOs, you could spread risk, or you could try and really understand them and go, hey, like, I think this is great. We're in a bull market at the moment. Let's put 10K behind it. And it sounds like if they're up 150, drops it to 77%. There's a lot of people that did that and then took profits rather fast.
Yes.
It might be a very, very fast way to turn a $30,000 sum of money into a whole lot more. So yeah, we'll chat more about this, my man.
Yeah, I think it's a good one, and I'll actually get the figures next week. I'll because I looked through it myself. I was just scrolling. In the last 20, I want to go back maybe to the last 500 and just see where they've ended up, and see if there's any like house edge that we can play.
Muted myself for a cough. Good man. All right.
I had no idea what was going on. Like his mouth's moving. I don't hear.
His mouth's moving. But it's not
that high tech mic he got
going. Very close to his mouth. So what did you say? You're up about $330, was it?
I don't think you should be shaving money off the top there. That's $334.
$334.
And thank you, sir.
No, that's all good. I can see why you haven't written it in here, because I'd be embarrassed too.
I'll fill that in as you're talking.
No, thank you. I appreciate that. So I'm $1,207 up at the moment.
Oh, is that a real number? Jesus,
real number?
Talk to us. Educate the people.
But I've invested a little bit more than you so far, and I think I went a little bit harder earlier. Came on very strong there, I'd say. So if I jump across to, let me just move this bloody thing out of the way where I hide those. And let's jump to this one here. So the first trades that I made were ASX stocks. So stocks that I actually already know a fair bit about, and stocks that I've looked at before and I'm already invested within. And ignore Ethereum here. I'll get to that in a second. It was just too bloody hard at the time to fill this out. And Binance tracks that really well for me. So I thought I might just use Binance rather than a spreadsheet. But Tyro is a merchant terminal, essentially. And the thing I really like about Tyro is that they're a company that I use a lot. And I use their products. It's a very simple business model. It's literally just a terminal. You tap your card, you go. They take a very small percentage of those fees. And what happened through COVID was they got absolutely smashed. And pre-COVID, they were sitting about $4.50, I think, at their top. So $4.50. They only went public, maybe half a year before COVID hit. And to go from $4.50 to where they are now, which is $3.82, but they're more profitable. They've got no debt on their balance sheet. They've taken on an extra 30,000 terminals this year. They're moving into e-com and other markets, so being able to take payments online. There's so much upside to this business. And I'm buying the business behind the scenes. And each week through COVID, they're pretty much just released, this is our financials year to date for this compared to last year. And they're incredibly more profitable than they were last year, and more profitable than the year before when they were $4.50 per share. So I'm looking at this going, well, either they were way overvalued before and all these new acquisitions and all these new ways they're making money at the moment and all this extra money they're making is just reflective of the previous share price, or they've still got quite a runway to go back to where they were. And because they've got a better business model behind it, it would make sense to me that they continue to grow. And I'm a huge fan of Warren Buffett, as you know, and thinking about the different ways that he sort of sorts through and starts to think about stocks. And a little bit later, I'll go through the things that I would tick off before I buy a stock most of the time. But one of the things he does is, do you understand the business? Is it simple? Do you use it yourself? Like, we use these terminals ourselves all the time. So I look at this and go, it's a huge opportunity in a simple business with zero debt. So it's very unlikely it's going to go down, and it's got a long way to go. And what's COVID done? Nowhere takes cash anymore. So everywhere's using card only. So that's going to drive up, the fees that they're able to take, the overall revenue they're able to take. And the fact that they're acquiring, smaller businesses and pulling them in, like it started off very, very healthcare based, and they've acquired a few of the other smaller players in healthcare. And my background in healthcare, I see how that's really streamlined the process. And I imagine within 3 years, every healthcare clinic in Australia is going to be on Tyro because it makes it so much easier to have that. So having that bit of knowledge and understanding that product really helps me to go, I can see where they're going. And it's not just that, but they've just signed a deal with Bendigo. Well, they signed it last year with Bendigo Bank to, I think it was 26 or 27,000 more terminals. Jeez. And if you think, if each terminal takes X amount of dollars per day and they're taking a small fee from this, they just need to continue doing this over time. They can have a very large profitable business. And if you look at what are the overheads for a company like this, there's not much. It's really not much at all. So they've really crushed that. So they're up, since I bought in at $3.47 on the 28th, they're up 10%. And I believe this is a company we're going to sort of see go up and down, really with what's happening in tech and people taking profits. But I would expect over the next few months that we see that considerably increase again. The other one that I've jumped in here on the 28th as well was Webjet. I fucking love this company. They're a good company. I saw last Sunday, I think it was straight after we had this chat, Singapore, their aim is to start treating COVID-19 like any other venereal disease. So just like the seasonal flu, that's their goal. And the second I saw that, I was like, oh, because they've said this, every other Western nation is going to have to follow. There's no way that Australia, Europe, the USA can then go, well, no, we're going to keep treating it as this thing and keep locking down and freaking out and all this shit. Because they've set that standard, I feel like everyone then had to follow. So I went and decided, all right, cool, I'm going to go put $5,000 in Webjet because the stock market's looking to the future. And although it's not going to help right now, when we're looking into the future, I believe there's going to be an announcement coming soon. And this announcement is going to say, we are aiming to treat it just like the flu. And then later in the week, they said, we're going to treat this just like the flu. That's phase 4 of our plan. And so now...
Oh, they said.
They did say that in Australia. They have, my man.
Fantastic. They're definitely...
So essentially, we just saw it. What's that?
They're definitely not doing it yet.
No, that's in phase 4. We're in phase 1, mate. Lock everything.
Banned from seeing each other.
Yeah, we're pretty upset about that. That's okay. Just shed a tear for us. I meant to be in the Gold Coast on Thursday, but I think we're locked down to the half. Is that a half a case you've got or a quarter? Something like that.
Someone sneezed in a restaurant.
Someone sneezed in a restaurant. That was the one. Stitch up. So as soon as the government announced that, the share price shot up. And I'm expecting that the share price is going to continue to strengthen and improve moving forwards. And one of the reasons why is because I've had a look into, where is it? This one here. So looking at the business behind this and understanding what they do. What's that?
Did you make this?
Oh,
I appreciate the effort you've gone to. The plane down the bottom.
Thank you. I even put us in bed together too. Yeah, I'll let you decide which one you are. But one of the really cool things here is people don't understand maybe what Webjet actually does. And if we scroll down a little bit, you'll see web beds. And I think this is a bloody awesome thing. So web beds is essentially, so Webjet hooks you up with flights and everyone uses it. It's got a great brand. It's a really awesome thing. I use it too. Web Beds does the same thing, but finding hotels. And they're also talking about really expanding into North America. And when I see expanding into international markets at the moment, especially in travel, and I see this share price isn't moving just yet, and overseas is opening up, I feel like we're going to start having profits come in and money and revenue coming in that investors haven't seen, or like large investors haven't seen just yet. So when they're announcing their financials, and that should be late July, early August, I imagine they're actually going to do a little bit better than they were anticipated to. And I anticipate the stock price is going to increase with that, because there's a lot of people focused on what's happening in Australia. And every time Australia has an issue, Webjet tanks a little bit. And every time it tanks a little bit, it's a great opportunity, I feel, for me to be buying this stock, because it's going to go back up, and its business is not just Australian. And I definitely think we forget that. And they also have a large B2B, so business to business, I guess, side of their business too. Not only that, strong cash position. So they've decreased their amount of liabilities, debt. So they've streamlined and improved their business. They've really improved their business. And you can come through and have a look at the different revenues that they've been generating. But it's looking really, really bloody good. And I'm really excited for when they come out with their financials in just over a month's time now, to look at where the money's coming from. Because at the same time, they are improving their market share. If we scroll down, where are we? Here we go. So they're increasing their market share. And even though the market share is, I guess, the market as a pie is smaller right now, we know it's going to come back. And when this market comes back and we get a larger market share and we've improved the efficiency of the business, so we're spending less, I believe this share price is just going to go up and up and up and up. So that is one of the reasons that I chose Webjet as a $5,000 investment. So a whole 1/6 of my investment.
That's fantastic.
Now, if we jump across now to my other trade or trades that I made, unlike Benji, I feel that the crypto market isn't going to have the same dip that it did in 2017. And I think in 2017, it wasn't institutional. A lot of people didn't really know and understand about it, compared to now, where everyone is sort of getting around it. There's excitement. Yes, there's ups and downs. There's the UK banning Binance and China cracking down on whatever China cracks down on, and banning Bitcoin or mining Bitcoin or whatever it is. But I think this is becoming, and I put my hand up and say, I fucking hated crypto for a long period of time, because I still think it's that greater fool theory for a lot of them, of you buy it and you hope it to sell it to someone who is a greater fool than you for more than you bought it for. A lot of them, I do struggle to see the intrinsic value behind it and how it actually creates wealth, creates money, or how it actually provides security, I guess, compared to, say, a business that's generating revenue and you're a shareholder and you're entitled to some of that revenue. You own part of that business. So I thought the best way for me to get involved in this was to go, well, let's try and create my own little index fund. And I picked the top 10 coins. I looked at the top 100 and I was like, holy shit, this would be ridiculous, because Bitcoin has such a large market share and Ethereum then also has such a large market share, which makes it almost impossible to have a decent sort of index, because there's too many small players and 2 or 3 very, very large players. So I took $15,000 and then I just spread it like this. I put 55% in Bitcoin, 21.63% in Ethereum. And the cool thing, obviously, about crypto is the fact that you can buy, percentages or very, very small parts of coins. So I've set this up as it is now, and I'm interested to see over the next sort of 1, 2, 3, 4, 5 months what happens, especially if the market goes up or down. I think holding on to the top 10 is going to be, in the percentages that they're weighted within the market, it's going to be a winning strategy long term. Because I think that things like Bitcoin, Ethereum, they may not be the way of the future, and they might not be in 5 or 10 years the big coins that people really want or that are very valuable. But I believe that blockchain, the technology, is going to be a massive, massive part of our lives. And investing now and trying to have a decent spread according to market cap, I feel is going to be very, very profitable. So these are my trades, my man. That is what I've done.
Doing well. It's a nice long snout you've got on you.
Little snout there. Before I get into questions on yours, do you have any questions on the trades that I made and maybe why I made any of them?
Can we see my vid? There we go. So a couple of your trades, Tyro, I think massively amazing. You've been researching that company for a while. It just makes a lot of sense. Webjet looks phenomenal because it literally dips every time there's a lockdown and then rises 3 or 4 days later. So you're absolutely crushing that one. Plus, obviously, web beds and all that.
They also do like camper trailers and shit now. So like,
Oh, really?
and they're moving into as well cars. So they're trying to do the whole like whatever you want to book, you can book it through Webjet, Webcar, like whatever it's going to be called. They're just going to have the whole suite, and they want to really move and capture international markets too.
Almost like the Airbnb, and I can tell you, Airbnb's cancellation policy is
their cancellation policy is not very good.
Not very. If you're listening to this Airbnb, Dr.
Right.
Peter Flynn want a refund. If he hasn't done it already. Your crypto. A couple questions on your crypto.
Yes.
I'm curious on your thoughts. So the reason I think that it's a overall downtrend at the moment is because, like, I know, like, was it El Salvador, and is that El Salvador?
El Salvador, yes, the official crypto,
the official nation's currency, which didn't budget at all because it's such a massive market cap at what is it, $600 billion in Bitcoin? Is that right? That like El Salvador doesn't really budge that more than a quarter of a percent or something. But my thoughts are crypto over the last 18 months was a massive boom. And I think what I saw is that everybody made money up until 4 months ago. And so what happened was the people's coin. We get into that people's coin in a minute. But essentially it's unlike everyone's friends and everyone on Instagram, everyone on TikTok was like, I made this money, let me teach you how. And it's like, well, we know how. You put it in crypto, and it's almost like the MLM marketing where everyone's telling their friends to get in and it goes up, and everyone tells their friends to go in and it goes up a little bit. And what I've seen, because I try to monitor these trends in Facebook groups and Discord channels and even Google Trend data, is it had a massive drop where it lost like 40% of value overnight. And all of a sudden, all the stories weren't, we made a bunch of money, but some of the stories were like, we literally lost half our life savings. Thanks, Elon Musk. And like, they're blaming other people for their stupid investments. And what I've seen is since it's continued to be down, I think Bitcoin's down 50% overall. There's not the same amount of excitement and like social like thing going on where it's a viral trend and it's going up. And I think there's a lot of fear in the market, and I think they're going to try and buy in when it goes up and then sell when it goes down. And that's why I feel like we've seen it stagnate a little bit, which is why I personally am not holding an index fund. Obviously, I'd like to hear your thoughts on that. But for me, those index funds, which are the top 10 coins, which have such massive market caps, which is market cap for everyone doesn't know, is like the total amount of money that's invested in that currency. They don't have as much room or as much volatility as something with a lower market cap. Something has $1 billion in it. In order for it to double, you need another $1 billion to go in, and the price of that coin doubles. Where Bitcoin, you need another $600 billion to be invested in order to double your money there.
Yeah. So what are your thoughts then around crypto? Would you be leaning more towards smaller coins with a smaller market cap? And if so, like, what is that market cap? Like, so is it over 10 bill? It's like maybe not quite worth it for this challenge. Are you going to be looking for ICOs? What's that?
Yeah, I think I'm curious on your thoughts as well. My thoughts are ICOs were a massively awesome thing, but similar to IPO, initial public offering, ICO, initial coin offering, where you take a coin public and everyone can invest in it. But if you get in before it goes public, you get it at a much cheaper price. Like I bought the Glimpse stock at $7. And then when it went public, people were buying it for $12. So you get in before that public offering that they call ICO in crypto. I mean, ICOs have done very well, but obviously there's normally a massive sell-off as soon as people get in. Like we're trying to get in to triple their money and then get out. It's a lot of weird pump and dumps going on, which we do not want to be a part of. But obviously an ICO seems fine, and smaller coin market caps, because I follow a guy called Alex Becker. He talks about how Bitcoin and Ethereum are basically leading the charge in the coins within those ecosystems. So you have like a big coin like Polkadot and then you have coins within the Polkadot ecosystem that's based on the blockchain of Polkadot. And what happens is Polkadot goes up, and Polkadot's, I don't know what that's worth, but maybe say it's worth like $6 or $7 billion market cap.
14 billion.
Well, way off. 14 billion, $14 billion market cap. There's coins made inside that actual ecosystem of Polkadot that then skyrocket way bigger than Polkadot because they're following the trend of the overall coin, but because they have market caps literally in the millions, it could be like a $3 million to a $12 million market cap. They're like 2 or 3xing where Polkadot only moves up like 10% sort of thing.
And that's the thing. Anytime you're investing in something that's much larger, it's the same with a company, a very, very small company. It's easier for them to double, triple, quadruple. It's also easy for them to go out of business. It's the same thing, I believe, with the smaller coins. Is it's easy for them to 10x, 100x, 1000x, but at the same time, it's also easy for them to just become nothing and become just obsolete. So it's managing risk, I think, is part of that, and that's what I'm trying to do with an index like this. This is my first foray into, second foray, but first real foray into cryptocurrency. And so it's looking at going, all right, well, I want to manage risk and really understand, because I don't understand much about crypto at the moment. And then as I start to understand more, maybe it's going, well, I want to create kind of like an index of very small coins that I think have potential to be much, much larger in the long run.
Yep.
And that's something that I think I'm going to be looking at. Now, I'm really interested in your IPO. And I'm really interested in, I guess, what you're looking for in an IPO.
I think this is actually a great transition because I'll tell you why I went to the IPO, but I want to give you, if you think it's a good time, a review, just the main takeaways from Chris Camillo's book from DumbMoney. So I'll share my screen again because I have a little bit of a quick write-up over here.
Oh, very nice.
Nobody look inside my drive, please. This is private.
Very private.
Very private stuff. So this is Chris Camillo's book. If you didn't watch the first episode, go and watch it and meet us back here. But basically, the whole reason that we're doing this and the whole reason we want to learn about this is I essentially came across this channel called DumbMoney, and they do social arb trading, which is trading a piece of information that Wall Street or big money or smart money, so-called, doesn't know about yet. And then getting ahead, like Pete thinks that Webjet's financials are going to be reported in a month and they're going to be really high. And then everyone's going to invest at a higher rate. So you get in based on that piece of information that you should have a medium to high conviction around. Now, Chris Camillo is like the main character, or he's at least seems to be the loudest and the brainiest of them. And I've got 1, 2, 3, 4, 5, 6 things that I took from his book. And this book, honestly, I think you might be reading it. I highly recommend you are. In terms of social arb trading, I feel like this is the Bible when it comes to it. So I'll tell everybody what I learned. Basically, there's 3 different types of analysis that you can do on a stock. Technical analysis is like the Fibonacci sequence, or you see like the candlestick length, and you see people like applying these like the speed of light times by like Avogadro's number, coming up with
diagonal support on this one.
And then they can only predict where it's going after it's happened. It's like, oh, this is why I did that. But it's hard to find someone who doesn't also sell a technical analysis course that is actually making good money doing technical analysis. Unless maybe you've got like machine learning and like a $20 billion budget, Ray Dalio style sort of thing.
I think we were finding that when we look retrospectively at graphs, we could put some fucking awesome shapes on there. That was good, wasn't it? Though, like I knew Tesla was going to take a tank then, just on the day.
And actually, if someone's watching this and they do technical analysis, whether this be in the future or now, I would love to put out a challenge where me and you, Pete, we find 10 graphs and we block out like the last week, and we show them the 10 weeks leading up to that, and they have to guess what that last week did. And if they can hit, say, 8 out of 10, well, then I can start talking and wanting to get into technical analysis. But I'm initially very skeptical.
Very skeptical also. But just on that, if they pick 8 out of 10, then going to be taking some stock tips from them. So
Yeah.
if you do take that challenge, we'd love to get you on the show.
We'll get you some commission. Get on the show. Yeah, definitely do. We're open to learning everything, but we approach, or at least I'm approaching everything sort of skeptically because I want to see where to best put this money. Fundamental analysis is exactly what Pete did. He's like, Tyro, they're getting 28,000 extra machines in if they make a 0.5% on every transaction, and the average transaction is this. You're sort of projecting based off the math and the financial valuations ahead of their actual public earning data and trying to find something that is undervalued. Like you had one, I believe it was Westfield, owned more real estate value than their actual share price was worth. So if they went bankrupt, you'd be profitable because they just sell their real estate and everyone makes money.
Yeah, you'd 5 or 6x your money, I think, at that time.
5 or 6x your money, which is fantastic. Fundamental analysis, I'm a big to medium believer in. But at the moment, because I'm studying this stuff at the moment, and I see Chris Camillo literally lead 40,000 traders in returns per year. He does social arb trading, which is literally finding a single piece of information disparity, which is a piece of information that the big money and Wall Street doesn't know yet. But for some reason, you have an edge in, whether it's because you're researching with a lot of softwares, which we can get into probably next week, or maybe you have kids and the kids absolutely love, like, what is it, Blimpy? Have you seen Blimpy?
No, but I would like to.
I believe his name's Blippy. It could be Blippy.
I'll get around it.
The kids guy who used to do really weird videos and then turned into a like a play school kid, a guy who like teaches kids about tractors and stuff. And he's like the 60th most searched for thing on Amazon, but he's not a publicly traded stock, so you can't invest in him. But if you had kids and they all love Blippy and Blippy takes his stock public, you're going to want to invest in that because Wall Street have no idea, specifically Wall Street, because they're mostly older men. They're not looking at what kids are doing or what like the women's trends are. They're more focused on what they are familiar with. So that's what social arb is. And a good example, because I don't think I talked about this in the last one very well. Goo was slime challenges. Like a couple of years ago, it could have been a few years ago now, massive like TikTok, YouTube, Instagram, everyone's making slime and Orbeez and like filling their bathtubs or pools, and it's going viral. And this guy, Chris Camillo, he's like, my kids can't get enough slime and we keep going and getting this Elmer's glue because that's the only way you can make slime. And I was telling my sister this story. She's like, oh, the girl I babysit, we went and bought so much Elmer's glue during the slime thing. And Chris is like, obviously I'm going to invest in the parent company of Elmer's glue because their sales are up like 1,000%. And he invested in it, and then they put their finances out, and he like tripled his money because he was looking at these trends. That's what social arb investing is. So the next takeaway was 80% of funds are outperformed by the S&P 500, like these big Wall Street funds. Then they're world-class at sales and convincing people and pensions to invest with them, but they're not actually world-class at investing because you'd get more money back if you invested in the S&P 500, which is just spread your money over the top 500 companies, just like you saw Pete create an index fund of cryptocurrencies, top 10 cryptocurrencies, top 100 companies outperform all these Wall Street, 80% of these Wall Street hedge funds every single year. So basically it's like, don't go with Wall Street and pay fees because you literally pay like 5 figures in fees for them to manage it. And it said you can get better returns and pay no fees without doing it. That's more of an obvious point. This one was interesting. He said every time, sort of like I say 15K a month, but sorry, I've saved $1,500 a month. I cut out all my subscriptions at the start of this challenge to sort of be more financially responsible. He talks about over your lifetime, you can actually times your money by 100 using the social arb strategy. So if you're going to buy a $5.50 coffee, in your head, be like, well, I could make this myself, and that's $550 extra. So no one really cares about $5.50, like spend that. But when you start being like, oh, I need a new car, and you start timesing that price by 100, that's when you start being like, oh, you know what? I'll actually put that in my investing account instead. And he says it's called OPM, or other people's money. And therefore you can take more risks with this money because you would have spent it at Starbucks anyway. So it's Starbucks' money that you've taken from Starbucks, put in your high risk account, and you're basically risk free because if you lose it, you wouldn't have had it in the first place. Not great for us with a challenge because we've got our own 30 Gs in, but if anyone's following along, it's just like save $100 a week, and it's okay to lose because you were going to spend it anyway. This one was really good. You cannot gain without risking. Those who have more to risk will gain more. This is why the rich get richer, because they have a higher risk tolerance. They're more likely to invest $1 million in a 10x project than someone who, say, earns $70,000 a year. And he's like, and this is why I invested all that money in Apple, because it was sitting in cash, not taking any risk. And he's like, well, the people who have spare money, say you have $100 million, you can invest 40 million of that in just really risky stuff, and one of them might 100x. And it's like, well, you don't have that money to actually risk if you're just earning the average wage, or you're not saving, or you're not got a big amount of money. So one, take more risk, and then two, be in a position where you can take more risk and you will then get more reward than everybody else. Obviously take calculated good risks, but put yourself in that position where you can take more risk, make more money, and save more money. And then this is the core of the book here. I'll bold this one. So he enters a trade when there's information not yet realized or appreciated by Wall Street. So the Elmer's glue, Wall Street, hedge funds, they're not looking at slime trends on YouTube. And so Chris is like, well, I know that Elmer's glue is going to be literally 10 times more sales this year than any other year. Like, everybody is making slime, and the only way you can make this slime is Elmer's glue. Wall Street, this is called an information disparity, where Wall Street do not appreciate the information that's not factored into the stock price. So then he buys into the stock, waits for the earnings, and he actually gets options in the stock, which is the next point I'll talk to you about, waits for the earnings, and then literally triples his money. And he said, be blind to fundamental and technical analysis. He's like, I don't care what the fundamentals or the technical looks like, because once that piece of information is realized, he does background research on stuff to make sure there's no other factors that are going to really skew the stock. But once he's done that, and don't invest based on this, anybody, go and read the whole book and take, this is not financial advice.
This is not financial advice.
Read the title of this entire channel.
It's just that's up here.
It's up there somewhere. It's everywhere. But essentially, be blind to fundamental and technical analysis. Obviously, do your homework on that stock, which he does. He does a lot of hours before he makes a trade. But if you think that piece of information is not yet reached Wall Street and big money, well, then you get in. And he's like, when do you get out? Everyone's like, when are you exiting these trades? You're not telling us. And he's like, when you see this piece of information, either on financial reports, in the media, Wall Street, what's a Wall Street journal, Wall Street Journal, whatever. There's like an online Wall Street forum or something where people talk about this stuff. It's like, when you see it become mainstream information, that's when you get out, because that's when the money has reflected that piece of information, which is the core of the book, which is fantastic. And the last thing on that is options trading to give yourself more leverage. Which is the opportunity, but not the obligation, to buy shares at a certain price in the future. You can 10x your leverage. And I'll tell you a very quick analogy to help people understand options, because I didn't understand options last week, and now I feel like I do. Chris gives a great example. He's like, people in like securities or like stocks, it's hard to imagine options, but when you make it physical and real, such as the real estate world, it's very easy to understand. So you can imagine a really poor town, say in New York or something, and you've got your cousin's there, and he overhears the mayor and a very famous baseball player walking through this town being like, this is where the new baseball stadium is going to go. So automatically you're like, this is information disparity. People don't know the baseball stadium's going to go here. The mayor's here, and everyone's like, this is where we're going to start building next month. And the mayor jokes that this is Chris's example, by the way, that there's houses up on a mountain that he said they're going to be the best tickets to this baseball game, because they're going to get to watch everything for free. And your cousin tells you this, and you've got $50,000 to invest, and each of these houses is currently worth $50,000. But once that baseball stadium is built, it's going to be worth double that, $100,000 plus. And so instead of going to one of the houses and be like, hey, I want to buy a house, waiting for that stadium to be built or even to be announced, and then selling that for $100,000, what you should do to options trade to have high leverage on your money You go to each of their houses, there's 10 houses up there, and you offer them $5,000 for the opportunity to buy their house in the next 6 months for $50,000. And when you do that, you can literally, in 6 months' time, their values appreciate to $100,000, but you've got the contract to buy them at $50,000, and you don't actually need to buy them. You then sell that contract to someone who does want to buy them, and you've turned 50,000 into 500,000, not 50,000 into 100,000. Which to me, that was like a mind blowing. Like, wow, that is a fantastic way to get more out of my $30,000 in this challenge.
Interesting, very interesting. And I think, would you then combine that with your social arb trading?
Mm-hmm.
So you find something that you're like, this is going to explode, but I also don't want to risk this money. And so my understanding of what you just said is you're able to say, well, I don't really want to risk this. What I'm going to do is I'm just going to pay you some money, or like offer a certain sort of contract there that I can buy it for this price within the next 6 months. And what happens if it doesn't go up like you expect it to?
You are not obligated. If say the prices went down, you're not obligated to buy it. You have the opportunity to buy it. So you lose whatever the options was. So if it's $5,000 in a house, you just lose that $5,000. But if you had bought that house at $50,000, you'd lose a lot more. So you're mitigating risk, I guess, at the same time.
Sounds too good to be true.
Sounds fantastic.
I know, right? How good does that sound? I'm very, very excited for this one. All right.
So, for example, on your WebJet, is that the one that earnings are coming out in a month?
Yes.
So what Chris would do, and you should read the book, is instead of buying $5,000 of WebJet, he would buy $5,000 of options that expire just after earnings are released. And you would get a lot more leverage on that $5,000, considering they hit the targets that you want them to hit.
How does the leverage work there?
So because you don't have to buy them when they go up. So you literally are offering $500 across 10 times the amount that you can buy, that $5,000, and then you sell the right to buy them at the current price to somebody else once the shares, say, have doubled. Does that make sense?
Yeah, it does. Unreal. I'm excited. I'm gonna have to. I've downloaded the book. I just need to start reading it now. That's gonna be the next thing for me, is ticking off, all right, learning around social arb trading and then getting into options too.
Yeah, dude, I'm scared. Once you get armed with options, I mean, obviously everybody be responsible out there, because you can lose a lot more with options. There's like unlimited downside if you sign up to the wrong contract. So nobody do this based on a channel called Not Financial Advice. But
people who are just very basic wannabe investors.
in week one of their challenge. Yeah, if you want to do that, you're a badass, and I respect it, but I don't condone it. I am excited to see what you can do with some options, though, because essentially with that Tyro trade, or with that WebJet trade, for example, if say stocks rose 20% and you could 10x that, you could get a massive return on that sort of money. Would be nice.
I thought I'd share this one real quickly. This is something that I'm a huge fan of Warren Buffett, and this is Warren Buffett's qualitative checklist. I've read everything that he's been about. I watch every video that he does, and these are the things that he says he looks for within a business. And this fits into, what was that called? Financial. What was the term for that one he used?
Fundamental analysis.
Fundamental analysis. Yeah. So, and I really like this. Is the business model simple? Tick. Do you personally use the products? So you understand what it is? Tick. Do you understand the products, the business model, and how it makes money? Because the more simple, the better. If you look at what Warren Buffett's invested in, it's things like Coca-Cola, it's ice cream, like Apple. It's just really simple things that pay large dividends and that people are going to use for all of time at this rate. Does it have excellent brand recognition? So looking at, could a competitor jump in the market and just kick it out because it's got no brand power? Does it have pricing power? And so can it change its prices? Can it raise prices beyond the rate of inflation without customers defecting away? I think that's an important thing to think about. Is it relatively timeless product with long-term prospects? And that's when you're looking at buying and holding for long periods. Was it selling the same product 10 years ago? Will it be selling the same product in 10 years from now? So looking at, is it timeless? And has it proven to be timeless? Are people still going to need this? Does the customer need to keep buying the product again and again? Love it. Anything like that is essentially a subscription, right? And if you couldn't sell your stocks for 10 years, would you still love to own the business? So they're the things I typically look for when I'm buying into a company. Is it has to really tick all those things off for me. If it doesn't really tick those things off, then I'm getting a little bit nervous that I'm getting something that I don't really understand and that I don't think has long-term prospects. And if I don't feel it has long-term prospects, then I feel like I'm just getting in it and it's more hopes and dreams than anything else. And that's where I'm really excited to start understanding this social arb trading and options trading, because I'm like, it's going to be less hopes and dreams, still a little bit, I believe, but less hopes and dreams, but larger, like you said, larger risk, larger reward. And in order to win this challenge, I'm not going to get there by just investing in the S&P 500 or just buying and holding already stable companies for long periods of time. So I'm very, very excited. Very excited.
I'm excited too. I just realized too, I'm just going to share my screen one more time because
please do.
I didn't talk about my actual social arb trade that comes from DumbMoney that I actually made, which is this one right here, Discovery Communications. So this is the one I think I put $4,000 in. I wish I could have put options in, but I wasn't eligible for options on my account. Now I am. It was funny because to sign up, you had to be like, what sort of risk tolerance do you have? And I thought that they wanted me to be like, I'm a moderate risk tolerance, so I don't like go and put ridiculous amounts of money in that I don't own. And they're like, oh, we can't have you if you're a high risk account. But they're like, sorry, you don't have enough tolerance to options trade. I'm like, fine, I'm a high risk. I'm a high risk guy.
Literally, I'll put it on black.
I'll put it all on black. Which is funny, but now I am cleared for options. I'm also cleared for international trades because there's a Canadian company that I'm looking into as well. And my thoughts here, I'm not educated on most of this stuff, but I'm actually getting it through DumbMoney because they've been doing this for decades, 12, 15 years now, and I've been doing it for a week. So it's like I could be going like scraping financial books myself, but I'm more like I'm keeping my eyes peeled, but I'm just sort of getting in on their trades to start the momentum, and then I'm going to try and find my own. But this one was fascinating, and DumbMoney have a full video on this one, but it's Discovery Communications. So I thought this was perfect for me because you can see this is the last 5 years, their stock was very stagnant. And then in December, they actually announced that they were opening their streaming platform. And you can see it went from $28 up to $77. So almost tripled. And then absolutely crashed right here. And it looks concerning. But what I heard, and this is the really broad analysis, social arb analysis on it, is that there was one investor who had like $5 billion. You can see their market cap, once again, all the money in that stock, invest in that stock is the total market cap. But you can see this massive sell-off. Apparently there was a guy who was super over leveraged who had $5 billion worth of stock, but only had like $50 million worth of money or something. Like someone gave him ridiculous leverage on his money, and then the bank wanted it back because they realized they were way over leveraged, and basically sold it for a really cheap price. So that apparently was the massive sell-off here. Nothing to do with the business, but just one of the lenders who was actually loaning one of the investors money wanted their money back. So it was a massive sell-off, and then that caused it to drop down back to about $28. So I got in, I think, at $29 or maybe $30 flat or somewhere there. What did I get in? $30.72. Essentially they're making more money apparently now after their trading platform than they were from their streaming platform than they were making as being part of direct TV or pay TV or whatever they call it. And apparently their consumption is up 2x. So they're getting twice the amount of viewers than they were getting when they were part of the box that goes together on pay TV. There's a few other really good figures that they had. They're signing on with about 200 I believe this is from the same video here. It's 200 partners, including advertisers, and then people like AT&T, who are going to be offering discovery packages to their customers. And there was a lot of so-called fundamental analysis here. But the social arb trade, I'm here in Australia, and me and my girlfriend, we watch 90 Day Fiance, and we used to watch it on Amazon Prime. It literally got taken off Amazon Prime because Discovery's pulling all their content. And so much content's been taken off things like Amazon Prime, and we weren't able to sign up for Discovery because we were like geographically like restricted to watch that content. But we literally we bought a VPN and we paid for Discovery to continue watching 90 Day Fiance. And you look at their class of content, and they've got so much content that they've pulled from everywhere. So the social arb thing is like, someone in Australia needed to sign up for this to continue watching my show. And I know a lot of people, and obviously the stock price reflected that before that investor sell-off. A lot of people were the same. So this is a relatively big bet. I think I got 4,000 out of 22,000. So almost more than a sixth of my portfolio in this at the moment. And I'm thinking I'm going to hold it for about 2 to 3 months until their financials and data get realized. And I hope we can peak somewhere way above that for initial peak.
Interesting. Very interested in 90 Day Fiance and whether or not they slipped you a crisp 50 recently, because I think you said about 15 times there 90 Day Fiance. And if you want to watch it from Australia, this is exactly what you have to do. And we'll link
sign up with my feeling.
Who's got out?
Snoutinfront.com.
What is their reporting date? Do you know?
I do not know.
I'd be really interested. I imagine their half yearly reporting is going to be coming up very soon.
I would say soon as well.
So,
yeah, I would have. And in hindsight, I sort of, because we're only at 7 days, I want to jump and have some fun. But in hindsight, I would have loved to have gone Chris's strategy, which is options on that stock right after reporting day, maybe 1 to 2 weeks after. So it's had time to realize what it's done, or we've had time to get out quickly.
Well, that's what I was thinking just now in terms of, do I even build on the success you've had with that and go, all right, let's start options trading, discovery options. I'm just saying, maybe you throw me under the bus, maybe you're not, but that's an interesting one, especially if the business fundamentals you believe have improved as well.
Yeah, if you're interested in that one, check that. They did about an hour and 20-minute whole video on that one on DumbMoney.
Amazing. Well, I think for me, the big thing moving forwards for the next week is going to be finishing that book. So make sure to finish that book. I open my options trading account. I make sure that I don't give a fuck about money, and I'm just like literally just going to lose all the money. I financial risk it all around it. Does it just ask like black or red, and you just pick one of the two,
or green if you want zero,
or green, or grey if you're colorblind.
Can't see.
But for me, that's going to be the big thing I'm going to be focusing on over the next week, is going, all right, well, understanding and learning more.
Yep.
Similar to you, I put a lot of the money in things that I think are going to grow in the short and medium term already, because I feel it's a better investment than holding it in cash. And I'm going to be able to deploy those things rather fast when I need them. And that's probably one advantage as well to crypto, because crypto trades every second of every day, whereas the issue with the stock market is it's only trading from Monday to Friday, between specific hours.
Yep.
Having that money in crypto actually does mean that you can use that whole lot faster if you need to.
Definitely.
So that's my weekly plan, is going to be finish that book.
Yep.
Interested to know where you're going over the next week.
I'm going to do a lot of IPO analysis, especially now that platforms such as Webull, and I'm guessing Robinhood or any other these new trading platforms, which a lot of kids and younger generation have their hands on, and they're trading cryptos and Dogecoin and everything. So it's a lot of money being pulled into these apps. And if there's something on the homepage that advertises get into an IPO and everyone wants to make money fast, could be a great strategy over the next couple of months till everyone figures it out, and the doubling gets shorter and shorter till everyone sells off within seconds. But I might analyze the last, I'm going to say 100, and I'm going to put a little spreadsheet together, because I bet based on the last 20 that I saw, the average returns were going to be something like 30%. And I'm just like, well, I'll throw 10 G's in that to see how that goes. or
Fast
even
and loose, baby.
fast and loose, bro. Especially while it's a new feature. It's sort of a social arb use of the word of features. The other thing I'd like to do is like to start sharing with the audience. I've got a lot of software that tracks trends and social trades and stuff. So once you read the book as well, and we basically both just become social arb traders, we can start getting into that. I won't do anything on that this week. What I will do is check out the IPOs. I said I was going to watch all of DumbMoney's content by the end of the month, so I'm going to continue to watch DumbMoney and follow the social arb route. And then the last thing I'm looking at is the BSV, Bitcoin SV with Craig, right? Who won? He literally has won like a settlement in court that he's the original owner of the original Bitcoin white paper. And the BSV went up 20% in the last week. It did drop a little bit because all crypto seems to be quite stagnant. And dude, the funny thing is like this lawsuit that's going on is by one of the founders of Bitcoin's brothers, essentially, is the whole thing about this lawsuit that's going on is they're saying that Craig owes them Bitcoin because he was an original member of the Tulip Trust, which is like the original Bitcoin founders. And it's like, I don't understand how people like, he can't be Satoshi, the founder of Bitcoin, yet the lawsuit is suing him for being an original founder of Bitcoin. So it's quite a fascinating premise that I'm quite uneducated in, but I'd almost like to make a video once I get all that facts together about the cases for and cases against Craig Wright being Satoshi.
Definitely. I think also, and I've had a few people reach out already saying, I'd like some detailed sort of just open up a spreadsheet, share screen and go into detail what you look for, what are the things you look for when you're looking into a business. So maybe some of the trades that we do make as well, we just do some in-depth videos where it might be jump on and for 30, 40 minutes, literally just going through, this was where I found this first piece of information and then I did this with it. These were the things I looked at. This is my exact process. This is what I've now invested in it, and then track that over a little bit of time. And they could be maybe supplemental videos to these conversations we're having that we're able to just go, well, for this investment with Webjet, holy shit, it bombed, and then travel died and COVID came back, and then there was a Delta. What would E be? Echo? There's the Echo variant, and it just, someone had a sniffle somewhere and it just all went to shit. So making a few of those for us too.
I like that. DumbMoney do something similar. They call them conviction reports. And they do like a little 2-minute video on the trade they made and what went into it. And we can just post them on the channel, and then we can like refer to them. It's like, oh, I did Discovery. You want to know in detail? Go check out the conviction report on Discovery. Yeah,
we might go convicted report then. Change it up a little bit.
Convictos.
Where did conviction come from? I'm interested.
What about the definitely no conviction report?
This is not a conviction report.
Yeah, that's good. This is not a conviction report.
I like it. I like it a lot. All right, man. This has been an absolute pleasure. And
hell yeah.
I'm enjoying that I got my nose in front at the moment, but listening to the things you're working on and the leverage you're looking at and the IPOs you're looking at, I'm getting a little bit nervous. I'm not going to lie.
So you're not, because we're sharing all the information, and now you're like, oh, here's how I can triple my snout overnight.
I'm in this little comfort zone at the moment, and you're just like, oh, it's raining money. So I got a feeling I'm going to need to step my game up a little bit.
Congrats on the snout, man. I respect it. It's pretty impressive. $1,200, whatever it is. $1,207 in a week's not shabby.
Cheers, brother. Well, that'll be us signing off from This Is Not Financial Advice.
Oh, financial advice. See you next week.
Definitely not financial advice.
It's definitely not. It's crazy if you think it is.
We'll see you next week, my friends.
See you.